Hey, good morning. This is Vance out of Seattle, Washington. Welcome to my morning Forex trading show. As a special topic today, I'm going to talk about a simple way to predict price direction and do it with great accuracy. But first, I'll talk about fundamentals and price. This is the last show this week. I do these Monday through Thursday, and so I'm looking forward to doing some writing and working on music this weekend. Yeah. Again, welcome to my show. Just let me show you very quickly how to see everything I'm talking about on the show. Where is it? There it is. Just one moment. On the player, oops. Hang on, it's not quite. Well, it wants to do that every other time. There we go. When you press play on the show, make sure you click be part of the conversation here, and you'll be able to see some links here as well. You can click here to follow me on Twitter, and you'll find out, just minutes before the show, and what I'm going to be talking about on the show. And I'm not going to send emails out for every show, so that's where we're moving to the future. Also, if you're coming from Google, you've watched that video on Google, my #1 video. You're probably looking for the books. You can find that at this link, Forex Art of War. And it's right here in the top right. That's my most popular books. And it'll tell you why people fail and help you build a strong foundation. Just sign up there and you'll get those books. Okay. I have one last announcement. Starting Monday, this will be the last week that I'll offer personal coaching from me for as little as $99 a month. So that's going to go up thousands of dollars 1 week later. But what I'll teach you how to do is I'll teach you how to master probabilities and master execution. You can even try it for a month with no risk. So this is the last time, only $99. And I just want to repeat, this offer is never going to be made again. So if you want to learn more, just contact me. Okay, so let's get started. In fundamentals, that's basically the sentiment and the news out there in the world. Ebola has become quite the concern here in the United States. At the moment, Dallas is thinking of declaring a disaster area, which would put their emergency plans into motion. This is a step of prevention, not a response to an outbreak, I should point out. Also, the hospital in Dallas has admitted making mistakes, because some of us were wondering, wow, if they were wearing suits and following all these protocols, how did someone else get it? Well, they made mistakes. They broke protocols in spite of their best efforts. And then that nurse did fly on an airplane with a fever. Officials are tracking down everyone on that flight. But naturally, I'm thinking, well, she contacted other people too, didn't she? So we kind of have a period of wait and see. Personally, I don't think we should be afraid, but we should be paying attention and also be careful not to get caught up in media hype. Some of what you're hearing is political and some of it's just to sell news, but clearly what was happening the last few weeks was the media misquoting the CDC. So you're going to have to think for yourself, because no one's looking out for you. But err on the side of caution and staying calm and just ask yourself, what can I do? The markets here in the United States have been taking a beating, but notice that money is not flying into the dollar as it would be if this was real market fears. I personally agree with business leaders who are calling this a market correction. We've just been going up and up and up and up with no correction. So that's what I think this is. And I've looked around at various investments. It seems consistent with that. Now, new information could change my mind, but that's how I see it right now. All right, so let's take a look at current price movement. I'm just going to take a look at the pound and the euro real quickly. I put some yellow lines to show you here that it's showing higher highs. In other words, price is showing a higher high in its move up, but it's also showing a lower low. And when you see this opening wedge, this basically tells you that there's probably a pretty good balance of buyers to sellers in this particular range, which is about 82 pips, pretty big. So I would look for a break above 60.17 for a buy, at least for to consider buyers having a high probability advantage, and a move below 59.53 for a seller advantage, and you'd have room of about 70 pips before you run into this bottom. I'm going to revise this a little bit, or just add about, I think we're going to run into buy orders in the 58.90 area, but you still have room. There's plenty of room. And I'm going to talk a little bit about the trend price direction in just a moment. Going over to the euro. The euro had a really wild day yesterday. It moved all the way up 247 pips, reversed halfway, pushed up again, reversed, to almost 76.4. It's just been wild and wacky. It's currently sitting in a pretty big range right now. This really falls into the category of when something unusual is happening, you really need to wait for the dust to settle and the market just to get its steady tone back. But if you're looking for a buy, look above 28.43 or sell below 26.98. Also keep in mind there is a support area right in here. In this current context of the market, there will be some buy orders, people looking to buy in this area. The overall sentiment for the entire market is still the same. Strong US dollar, weaker euro. So what you see happening, what I think you see happening out there in the world right now is investors fundamentally changing how they approach their investment. I think we're seeing a move to a more normal economy. That's what I see right now, because I see a lot of things happening that we haven't seen in a long time. So during this transition, we almost need to be a little bit patient to let things shake out. If you get a great setup, take it. But if you're feeling like antsy to take a trade, be a little bit more careful about that. All right, so I did want to show you yesterday. I think I might have deleted everything off the chart. That big move that happened yesterday. It was moving so fast that you would have had to use a 1-minute chart to see the behavior patterns that we look for. But here it is right here. There's one pullback and push. That's one. And then the next one starts about right here. There's another one. Pulls back to about 61.8 on that one. And then it takes off again right here. And there's another one. Right. And then if you look here, from here to here to here, there's another one. So there was 4 potential setups on the euro, but you would have really needed to have a lot of experience and specific skills to be able to grab those in a fast moving market. And also you would have had to have a retail broker that would have enabled you to get the price you wanted as well. Most retail Forex brokers, when there's hyper volatility, the spread's going to be separated, especially the variable spreads, and you're not going to get a good price. Even with the fixed spreads around high impact data, the brokers will not let you get in close to where price is. So that's true with most retail Forex brokers. You can get better pricing at more brokers that require bigger deposits, like Interactive Brokers. But keep in mind that you also inherit a little bit of complexity too. Those are not simple, stupid to use. You really gotta learn how the system works, and you gotta practice so you can develop confidence. It's not this one button push thing that you've got at the retail brokers. Okay, so that gives you a little bit about price and what to watch for, and gives you a little insight into the market. Now, what I want to show you now is a simple technique for predicting price direction. If you do this right, it has incredible accuracy, approaching about 100% accurate. And the reason why is because if it's not giving you a good read, then you're not going to take a trade anyway. But these moving averages, if you want to make a note, are 21 period and 55 period EMAs. Now, what we're using this for, and let me zoom out just a little bit for a minute. There's an ebb and flow to the money. You can see the ebb and flow, up, down, and you see a big, strong move here. You see another really big move back, almost equal to the one that moved down. Another move down, another move back. that looks like a pretty amazing Elliott wave cycle now that I look at it, but that wasn't my intention. My intention is to show you this flow, this ebb and flow of money. Balance shifted to the sellers, back up almost to the buyers, down to the sellers, back to the buyers, and then in the middle. And so you'll notice as these things shift, you'll see these moving averages move over and spread apart. So moving averages by themselves are not very reliable, but they're going to give you an overall read on the balance of money, whether the buyers have an advantage or the sellers have an advantage. But how you really make it accurate is if the 21's above the 55, you can assume that the buyers have a bit of an advantage. But to make it extremely accurate, you need to add one thing to it. And you need to add that the trend, this is if the 21's above the 55, it's an uptrend. If that's the case, you also need the trend to advance. Now, what's the highest point of advance in this particular trend since this cross happened? This cross happened here, and the highest advance is right there. And I really wanted to use an arrow. I'm not sure why I grabbed that, just unconsciously. Right there. You guys don't believe me. You just try this out for yourself. Now, so if it crosses that high right there, and I'm going to put a little rectangle there. So you got to trend up, but you're not going to consider a trade until it breaks the high. Now, when it breaks the high, what you're looking for is a move, let's say 20 pips or better, without a pullback to 38.2 or more, and then basically enough room to enter with good risk management. So let's say if it moved up here, you would have your target somewhere right around in here. Ideally, it just depends on the strength of the move. You get your stop under the former area, and then your entry wherever makes sense at 0.75 to 1. So this is just giving you one possible ideal scenario, but that's what you want to look for. So 21 above 55, trend advancing, price moving above, strong enough to get in and out with good risk management beyond the range of noise, which is about 18 pips. So that's this is the simplest way. Now, this isn't the only way to do it. It's just that as someone who's inexperienced with making consistent profit, you got to put together the whole package of skills, and you want to make sure that you're making everything as easy and as good as it can be. And so this gives you a little guidance there on how to do that. In terms of measuring these waves, I would also suggest that you go and look up my class. I put a free class up here on forexartofwar.com. Again, that's on the on the show that you're watching. If you click join the conversation, the link's here on the bottom right, Forex Art of War. But look for Master the Fibonacci tool. This is one of the most powerful techniques that you can learn. But what you're going to use it for is you're going to use it to measure where momentum begins that breaks above this range and how far it goes without that pullback. And that's what's going to enable you to see how strong the advantage is and where you can get in and out with good risk management. So hopefully you enjoyed that. Finally, again, it's been wonderful to offer this low price education and coaching that we started offering this particular offer in September of 2012. That ends 1 week from Monday. So do contact me if you'd like to know more details. I guarantee you're going to love what you learn. Anyway, I hope you got just one idea that helps you with your trading this morning. Members, I'll see you guys in our live trading room coming up in 1 hour. Cheers, everybody.